Leverage shares, ETPs, are a new concept. These are exchange-traded products offering daily leveraged or inverse exposure to an underlying instrument. ETPs can track popular stocks like Tesla, commodities like gold, and even sectors like energy. Here's how they work. If the underlying instrument rises 3% on a given day, the 3 times leveraged ETP aims to return 9%, while the 3 times short will fall by 9%. In the opposite scenario, if the underlying instrument falls by 3% on a given day, the 3 times leveraged ETP is expected to lose 9%, while the 3 times short will gain 9%. Leverage shares ETPs may be used for a variety of strategies, including expressing bullish or bearish conviction, reacting to news announcements or earnings releases, or simply hedging existing portfolio exposures. Leveraged ETPs are not buy and hold investments. Due to daily rebalancing, holding for longer than 1 day could lead to a cumulative performance that may not match investor expectations. All leverage shares ETPs are 100% physically backed. No swaps or other derivatives are used. Trade like any other stock, no margin account required. Are available in multiple currencies. Limit losses to the amount invested. Investors can now amplify exposures to individual stocks, commodities, and broad market trackers with a single trade. Leverage shares. Trade with more conviction.